let's move on to Imperial. So Imperial, of course, another of South African industrial giants founded by Bill Lynch back in the day. The core businesses are logistics globally, some in Germany, some in Europe, all over the place, West Africa as well, and then here. Car rental, tourism, financial services, vehicle distribution and retail, very important. They own the Kia and the Hyundai licenses. That's the master distributorship, in addition to a whole lot of vehicle distribution operations. Also been expanding into the general motor area, buying sorts of spares and businesses that distribute golf carts and what are those things that you ride? Those things where you lean, they go forward. Segways, exactly. The Segway business. It's probably tiny. Yeah. It's probably a flea on an elephant's bum in terms of the size of the business. But any event, market capitalization of this thing under new management since Hubert Brody left. It's been managed by Mark Lamberti, ex of Massmart. 32.4 billion rand. Dividend yield of 5.14. Dividend. Yes, sorry, 5.14. Price to earnings ratio, that's what I'm looking for, 9.6. But it hasn't really been shooting the lights out recently, has it?
No, so I guess it depends on your time frame. It has had a significant recovery from the bottom, but over a broader period sort of has been moving sideways. Yeah. So, I mean, this is where we're
there's
talking
the recovery.
about.
Sorry,
yes.
My apologies. I didn't notice that little.
Yeah, so quite a significant bounce. They came out with their interim results. They were actually more resilient, I think, than the market had been expected. Under Mark Lamberti, they have done a lot of work in terms of rebalancing the portfolio.
They've sold a few things, insurance businesses.
Yeah, and actually most recently, I think what's sort of driven the share price is now speculation, given that they've restructured a potential for a split as well.
I definitely got that sense from a Bloomberg article where Lamberti was talking about the two pieces. So just clarify for us, what would the two pieces be?
So basically now the logistics business, which includes quite a lot of international logistics, including Africa, and then the motor business, the more broader motor business.
Would be in one piece and the logistics in another.
That's correct, yeah. So, and you can see also they, in terms of AMH, that vehicle distribution business, they own 90%. They're acquiring the remaining 10% from management there, Manny DeCania. So also cleaning up the portfolio. So I think the market's seeing this and anticipating potential restructuring.
And the problem with the motor retail business has been exactly that. At some point, the comparisons were very good. They sold a lot of those i10s and i20s and what have you, and a lot of entry-level models. The rand was quite favorable. With the weakening rand, those vehicles got more expensive. People couldn't afford them. Then there was a bit of a downturn. Not active job growth, so it just feels like that business has really battled in recent months.
It has. I think what they've done is quite a lot of work in sort of right-sizing it and understanding the cycle, also getting their currency hedges right. So it's interesting. Volumes dropped considerably, but turnover not, because obviously the cars became more expensive. So in the recent results, actually that vehicle distribution business, the whole motor vehicle cluster actually did really well, and their earnings were up 15%.
Which is really impressive, as you say, given how tepid the motor sales numbers have been.
And your point was that a lot of cars have been sold, and they also make that point, they call it their car park, which is the existing sort of stock of vehicles out there that obviously need servicing and need parts. So that has also reduced the cyclicality in the business and improved the sort of earnings profile.
Okay, so that share chart showed a disappointing set of numbers over the preceding years, but with a nice recovery. So this is interesting. This is like what we were talking about earlier. You wouldn't have known there at the end of 2015, amidst all of the gloom and doom, that this was a good time to jump into the shares.
Yeah, so I guess what you would be saying on a longer term basis, this is a solid business with strong management. They focused on return on capital and restructuring the portfolio. It's really fundamentally cheap. It's a good opportunity. You may have sort of bought a little bit too soon in that drop, but from in terms of today's level, you would be up. So
hot now?
Yeah, I think so, yes, in terms of the potential for the restructuring.
Okay, so that's something new. Let's go hot on it as well for the same reason.